Hi, good morning, everyone. I hope you can hear me. Maybe Tashi, you can give me a thumbs up if you can hear me well. Okay, great. Thanks, Anil. Um, Good morning, everyone. Welcome. Thanks for joining us. We know it's early for you and, of course, quite late in the evening for Stephen, who's joining us. David, who's joining us from the the US. We also have our colleagues from the project. We have Stephen Creech, Pavitra from Pelagikos. So the Center for a Smart Future is part of a larger project with Oceans, funded by the Oceans 5 Consortium. And in Sri Lanka, it's led by the Blue Resources Trust. And the Center for a Smart Future is partnering on one part of that, and Pelagikos is leading on several other parts of that project. So the Center for a Smart Future, or CSF, which I represent, I'm Anushka Vijay-Singha. We are focusing on the sustainable finance or innovative finance for conservation of marine protected areas. And together with our team at CSF, as well as our international technical advisor, Lucy Emerton, who is also on the call, we've been looking at this very new area for Sri Lanka around mobilizing sustainable finance for marine conservation. There are two pillars to this, so maybe I'll just very quickly take you through that so you understand the context of this work. So there are two components to our work, and the first component really is about enhancing knowledge on marine conservation finance specifically. And conservation finance, as you know, and Lucy has been, presenting this to many of you also, is a very specific part of sustainable finance. So very early on in our Knowledge Roundtable series, under this component, we made a distinction between, overall sustainable finance and specifically conservation finance. So many of you have been part of our Knowledge Roundtable since late last year. They've all been in person, very engaging. We've had international speakers, international experts like Lucy also join us. We've had many of you presenting around your work, and we've had a lot of interesting discussion around that. We produced two analytical notes that capture some of the key insights from those first two Knowledge Roundtables, and they've been published on our website. Today is a little bit different in terms of format because it's completely virtual, but hopefully as equally engaging as the two in-person ones, as far as it can be, given that it's online. But please take this opportunity to interact with David Meyers. But just so you understand, there's also, alongside this, there's a second component which we are working on, which is specifically around developing conservation investment plans for selected marine protected areas. And our first site is the Viltaltiu Nature Reserve, and our team is working on that. We're engaging with the Department of Wildlife Conservation, and we'll update you more as that work progresses. So this is just so you understand the overall kind of architecture of this project, and today's roundtable is part of this component one, where we try to bring you new knowledge insights that are relevant for Sri Lanka as we are going a newcomer to this journey. As part of that, conservation trust funds has come up as an area that you said you were interested in during previous roundtable discussions. And we know now is an important financing mechanism or disbursement or financial management mechanism in the context of conservation finance. We know that the government and some other development partners are talking about debt for nature swaps, blue bonds, and other sovereign debt instruments linked to nature. And even for those, we know we need to understand conservation trust funds better, because the use of proceeds coming out of those financial instruments do need to get channeled through funds and funding mechanisms like conservation trust funds. We know this is very new for Sri Lanka, and we attempted to break it down for all of us, really. And we published a primer, a knowledge primer, to begin to help us understand that. That's also published on our website, and Tashiana has been sending that link to you as she communicated this event. So really, this is part of that journey in understanding CTFs better, understanding these financing mechanisms better. And today we have a fantastic person to talk to us about this, really getting to the nuts and bolts of it, because we do now have to get into the nuts and bolts of it. Because if this is going to be a mechanism some of us try in our work, we are certainly looking at it in the CSF BRT project. We know that IUCN is looking at it under the Global Fund for Coral Reefs project. So this is now time to get into the nitty-gritty and really make sure we understand how this works. I also want to acknowledge some of our other colleagues from other organizations who have also been looking at this. For example, the Environment Foundation, EFL, Lanka Environment Fund, and some of their projects in Mana also. So, and UNDP, who has been working on the Marine Spatial Plan. So I'm going to pause here with that introduction. Tashi will introduce David before David comes on. And thereafter, really, folks, it is entirely up to you to engage with David. You can post your questions in the chat, and I will pick those up during the Q&A. And also we'll have an opportunity for you to raise your hand and ask it verbally as well. So let's, it is part of our roundtable series, a little bit different with the grid on the screen, but really treat it as a conversation and make full use of the fact that we have this fantastic expert, David Meyers, with us. So Tashi, over to you.
Thanks, Anish. Thank you everyone for being here today. We are extremely excited to have David Meyers on board with us. So as many of you already know, David is an environmental finance expert and entrepreneur with more than 25 years of experience. From 2012 to 2018, David was a senior technical advisor for the Biodiversity Finance Initiative and at the Conservation Finance Alliance, for which he is the executive director. David has led the creation of the CFA incubator and the investment plan for the Global Fund for Coral Reefs. He has spent well over a decade in Madagascar and has worked in more than 47 countries. And so we are extremely excited to have David on board, sharing some of the practical considerations of conservation trusts. And as Anish said, getting into the nitty-gritties and nuts and bolts of this mechanism. David, over to you.
Thank you so much, Tashiana. I am going to share my screen. Whoops, you're going to have to enable me to share the screen. I'm going to do a presentation around conservation trust funds. It's an introduction presentation, but it will cover some key topics here, but I'm going to go pretty fast, and I may skip a few slides because the written guidance note that has been produced and discussed earlier by Anushka is very good and covers a lot of topics, but this will give us a background on potential discussion later. So just a quick introduction of conservation trust funds. What are some of the activities? What are the different types of program funds? These are what we call different types of funds that a conservation trust fund would use. Some lessons learned, and I'll talk about the practice standards for conservation trust funds, and provide some key resources. Again, this presentation is shared, so you'll be able to see those links at some point. And then we maybe just stop by one or two examples, and then we'll have time for discussion. So conservation trust funds are defined to be private, legally independent institutions that provide sustainable funding for biodiversity conservation. They're grant-making institutions. A lot of them are set up for protected area finance, but they can support a range of activities. Almost always work in partnership with governments, civil society, and in many cases, local and indigenous communities. Some of the first trust funds were started in the 1990s or before. There's well over 100 conservation trust funds now, and there's more and more being established annually as a result of debt swaps and project finance for permanence, which is expanding, and we can talk about that later with the opportunities. Well over $2 billion in assets being managed by them. The assets are managed on capital markets, and the proceeds of those investments are used to fund conservation. And they're often established in areas of high biodiversity, primarily in developing economies, but not always. In some cases, they're established in Canada, for example, and other countries. So some basics here. They raise money and they invest funds by making grants generally to nonprofit and non-governmental organizations, community-based organizations, but also could fund government agencies such as national protected areas, for example. The benefit of trust funds is they can support long-term management costs. They can support operating expenses, which are sometimes hard to finance through grants and others because donors want specific projects. They don't want to fund salaries and operations where trust fund can cover things like that. Importantly, they become really critical institutions in the conservation and civil society landscape because they get a seat at the table during discussions. They have money to give out. They can co-invest with government, and as such, it's not just the financing function that they provide, but really an institution that has a strong voice in the mix of actors at the national or subnational level, and sometimes regional. They are finance institutions. They're not operating institutions, and this is a big difference between a trust fund, let's say, that could be structured like a nonprofit organization, and a typical NGO. So they're not really directly implementing biodiversity. They're found, as you can see, mostly throughout the tropics, quite a large number of them in Latin America, for example. And there's 3 different networks, although REDLAC, the Latin American network, and CAFE, the African network, are quite active. The Asia Pacific network is not active at present, but we're about to stir them up and get them active again, because globally it's becoming more and more important, but that you can see the distribution there. So what is a trust fund? What does the word trust reflect? And it's a common law concept. So in countries that are common law countries, you do have this tradition of trusts. Generally, it's a 3-party fiduciary relationship, meaning there's a financial responsibility. And so there's the original source of the funds. Could be a donor, could be a government, could be any source, really. There's the trustee, which has taken on this responsibility to manage it. And then there's the beneficiary. So the trustee is managing the money on behalf of the beneficiary. The beneficiary could be the protected areas system. It could be communities around protected areas. So it's a very distinct group, but they're not in control of the money. Trustee is in control. And I'll tell you a little bit about how that works. So generally, there's a board of trustees or a board of directors, and they take on this both legal and fiduciary responsibility to manage that. So common structure is that there's a board of trustees, which is the governance body, who hire a director, executive director, a CEO, something like that, that's actually running the secretariat, who then hires staff that would be program operations, fundraising, or finance. So there's the director and the program staff and everything that they're the secretariat. They operate the fund, and the board of trustees oversees it and takes on the fiduciary responsibility. General structure. So what do? I mentioned they raise money, they invest and manage that money, and then they deploy that money. So in terms of raising the money, and we'll go through some other examples of how they're raising money, but generally through donors, debt conversions, could be from fees, entrance fees, for example, and it could be from taxes, government budgets, things like that. For example, one great conservation trust fund in Costa Rica is partially financed by a gasoline tax. So government can make taxes and money can go into these independent trust funds. Then they manage the money. So they manage it generally and invest it, if it's an endowment, for example, through a balanced portfolio, through international stocks and bonds, the best financial management you can have based on the risk tolerance of the board. You want to buffer for changes in the markets. Usually a diversified set of holdings is important. And then you take the revenue that you produce and then you can deploy that, or you can deploy other funds, and I'll explain in a bit, for your mission. So each conservation trust fund will have a mission. Oftentimes that mission is written into the charter or the trust deed. And then you'd have strategic plans, you'd have annual plans, you'd have calls for proposals, things like that. It's really important to focus on being cost effective and making sure that the money that you're investing or spending and deploying is having the impact that you want. I mentioned things called program funds, and these are 4 general types of program funds. An endowment, you probably heard of endowment funds before. So the goal here is to maintain a body of capital, or a corpus, it's called, of capital, and you invest that corpus and only spend down the investment profits. So that's an endowment fund classic. A lot of nonprofits try to build an endowment fund too. A sinking fund is like an endowment. You raise a lot of money up front, but you spend down the corpus or the body over time, as well as profits sometimes, over a fixed time period. 10 years, 20 years is traditional. And a lot of the project finance for permanence programs are sinking funds. They raise a lot of money up front, put it into a sinking fund run by a conservation trust fund that's invested, but it's also spent down. So the difference is that you have a lot more money that you can spend compared to an endowment. A revolving fund is where there's some sort of continuous source of funding. For example, I mentioned entrance fees to parks. If money can go in there, you have potential for a revolving fund or government money. And then pass-through funds are where the conservation trust fund is used basically as a vehicle for grant management. A donor gives one big grant to the trust fund, which then can provide little grants to community organizations or nonprofits. So just a little bit more detail. For example, an endowment, say you raise $100 million, right? That's a lot of money. You invest it, that's your corpus, right? And then you get a return maybe of 6% a year return. That's pretty good return of it for investment. But you got to make sure you set aside some money for inflation. You have to pay the financial advisor some fees. And so maybe you'll end up with a budget of only 3% a year. So if you raised $100 million, then you end up with $3 million a year to spend. The good news is if you manage the money well, you can spend that in perpetuity. Long-term financing, very stable. A sinking fund, say you raise that 100 million, you can actually spend down the amount. So maybe you're making some profits from the investments there, but your budget is much higher. As I mentioned, like if you raise 100 million and all you do it as an endowment, you'll have about 3 million. But you could spend just under, for a 15-year sinking fund, you could spend just under 10 million a year. So a lot more. Problem is, after 20 years, you're done. You don't have any more. But we need money now, so sinking funds are really a good approach. Revolving funds, again, you need a revenue source, goes into the conservation trust fund account. You buffer it for fluctuations, entrance fees, COVID hits, that kind of thing. And then you have a grant program, just the usual. You'd have your desired impacts. and your feedback loop, right? So this could be entrance fees, as I mentioned. It could be green taxes, could be a payment for ecosystem service system, or money from compensation such as biodiversity offsets. And then pass-through funds, really simple. The donor provides money to the Conservation Trust Fund, who then makes sub-grants to the beneficiary. So this lowers transaction costs, allows for small grant sizes, which are hard for donors to do, benefit from the local knowledge and tracking. This is sure that there's strong compatibility with national and local priorities. And if the trust fund is well managed, you got transparency built in. Everyone knows where the money's going and what it's doing. So that was my sort of introduction to conservation trust funds. Now we'll sort of look at some information, a lot of which came from a 10-year review we conducted back and published in 2020. You can get this on our website, conservationfinancealliance.org. And it's really a great document. It's quite heavy, a lot of material in there. But some of the findings, lessons learned, are that some of the key conditions for success are transparency, following good governance principles, having a committed and a competent management and leadership team, very strong partnerships with government and civil society, also tied to good governance and transparency. And then the ability to link global goals with local capacity. Diversifying your resource mobilization, so you're not counting only on one source of funding, and that's general good practice for pretty much any nonprofit organization. And then building trust. Trust is the key to having the right partnerships, having the right donors, and again, transparency, good governance, committed and competent management team. That really helps with the trust part. So let's look at some, money, what's been going on. So together, this is, again, data from 2019, 18 was most recently updated here. So you're talking about $2 billion being collectively managed. Since 2009, about 570 million was added to endowments. About 560 million was added to sinking funds. So there's been a lot of investment over those 10 years. And as I mentioned, it's increasing even more. Some sources of funding include multilateral donors, the GEF, the GCF, national governments, obviously some bilateral sources as well. International NGOs are often very involved in the establishment of them because they can bring in some private money that complements it. And as we heard earlier, project finance for permanence is becoming a really big source of funding. The project Enduring Earth is really worth looking into. And so we can talk more about that, what that means as well. How trust funds have raised money over the last 10 years is here. So donations to endowment funds, this has been the largest source of funding. Donations for specific programs or other expenses or sinking funds, that together those three really are the bulk of the money that's gone into conservation trust funds. But you can see that the money, there is a diversity of sources. So everything from impact investing, taxes, carbon offsets, debt conversion. This number that historically was quite low, but it's growing enormously. There's been some very well-publicized debt conversions, like in the Ecuador with the Galapagos Islands was 1.6 or something billion was converted, but it's leading to tens of millions going into conservation of the Galapagos. So that gives you an idea of some of the sources of funding, how that's being spent, what kind of projects, and and this is again where trust funds have the sweet spot here. They're able to give small grants, project-specific small grants, and so that's the bulk of the deployment of money is to project-specific grants, small, medium, and large, and Then there's annual grants, and multi-annual grants are less common, but still significant. Now, the black lines are what the conservation trust funds say, how they want to spend the money in the future. And so you can see, again, a diversification. So more talking about doing payment for ecosystem services, microfinance, loans, and other kinds of return-based investing type opportunities, blended finance. So quite a range of approaches are being planned. The CFA also produces the practice standards for conservation trust funds. The most recent update was 2020. It's an excellent guide. It covers these areas listed on the left in great detail. And there's recently been a sort of self-assessment tool that's been produced based on this latest update. That's an Excel spreadsheet where trust funds can look at how they're doing. This is an example of some of the standards. Of course, there's a lot of detail in the document, but there's in this case 12 program standards that provide guidance to the trust funds. Like the first one, the trust fund designs programs and projects to include monitoring and evaluation indicators that support evidence-based reporting of conservation, sustainable development, or climate action. So that's the standard. Are you achieving that? That kind of thing. And of course, it covers all those topics that I mentioned before. And then there's other key resources that are available from the CFA and others. I mentioned the practice standards, that 10-year review, the 2020 Global Vision Local Action document. There's a Conservation Trust Investment Survey, which has been going on for over a decade. The last date where we collected data was 2018, so that's a little old in terms of it. And then there's the Environmental Funds Working Group and the Environmental Funds Toolkit, which has a whole range of documents that are quite useful. And they're broken up into different categories, different regions, different languages, and really good resource there. I mentioned I would give an example or two. I'm going to just skip through here and choose one. MAR fund. So the Mesoamerican Refund. This is a perfect for Sri Lanka, given its participation in the Global Fund for Coral Reefs. So the Mesoamerican Refund was established as a collaboration among four trust funds in 4 different countries in the Mesoamerican area. So Mexico, Belize, Guatemala, and Honduras. And their goal is to conserve the Mesoamerican reef. It's the second largest reef system in the world. They use endowments and grant funding. They're bringing in innovative mechanisms such as reef insurance in there. And right now they're running the MAR Plus Invest program, which is a Global Fund for Coral Reefs program. And it's one of the more successful so far programs of the Global Fund. And we're really excited to see what comes out of that. So I'm going to stop there so we have time for questions. And just if you want more information, the Conservation Finance Alliance, we're an alliance of organizations and individuals. We have about 40 organizations, around 3,000 members. You're welcome to sign up for free on the website there, conservationfinancealliance.org. Thank you.
Thank you very much, David. That was very comprehensive, and I think it struck a nice balance between helping us understand CTFs as a structure better, but also how they seem to be used. And I found it really interesting where you showed where it is now and where it's likely to head in terms of the items. I think that's quite interesting. So maybe there are questions that folks will have around that also. So as we've posted on the chat, folks, you can choose whichever way you'd like to engage. If you still haven't had enough coffee in the morning to verbally ask questions, feel free to post it in the chat. But otherwise, if you're more awake, definitely raise your hand and I'll turn over the mic to you. I think we have our first question from Lucy. So I'm going to pose that to you. can you talk a little bit more about the role of government in the funding and governance of CTFs?
Yeah, great question. So it depends on the trust fund itself. But some of the best conservation trust funds have been supported by the government, both financially and programmatically. So the government, one of the challenges when you start to develop a trust fund in a country is that the government says, "Great, we'll take control of this. We would like to have a majority on the board, and so that way we can be sure that it's aligned with our goals." And so it's really important at that point for the people organizing the trust fund to remind the government that a minority position on the board would result in much greater donations from outside donors, right? So generally you have government representation on the board, but it's almost always a minority position. And this makes sure that there's alignment in the mission and the actions and the investments, but it avoids the risk of the government using the funds for political purposes, or it avoids really conflicts. It allows the fund to maintain its mission and achieve its outcomes more effectively. So governments are there at the table when the trust fund's conceived. They often provide financing, as I mentioned, through tax revenue or percentage of entrance fees. Trust funds in Belize, for example, received a entrance tax, things like that would help fund conservation. So it's a way for the government to earmark money when many governments are hesitant to earmark money these days.
Thanks, David. We have a couple of questions coming in. We have one on scale. So is there a certain minimum size that CTFs have? For example, in the Sri Lankan context, many conservation initiatives span just a few dozen acres or so, given fragmented land ownership and such. How do CTFs view small-scale conservation initiatives?
Okay, so to me, there's two parts to that. First off, endowments can be used by organizations of any size. You don't need, to use an endowment mechanism. You can be a tiny nonprofit and just, set aside money into a bank account. So that's the endowment part. But the trust fund itself, the structure is a little cumbersome because you have these checks and balances. You have a trust deed and structure like that. You often invest internationally. So there's a minimum size that you want to have. Just to cover your basic costs, you probably need to raise something like $10 million. Again, that's not sustainable. You want more, but just to make sure you're able to maintain your secretariat and maintain the small grant program, you need about 10 million as a minimum. So it suggests that for a country like Sri Lanka, you would probably only want one conservation trust fund. Now you could try to set up one for the marine environment and then another one for terrestrial. But again, because of scale benefits, if you can conceive of one for the entire country, that might be the most efficient. But it really, so like that would be, for example, focused on protected areas, both terrestrial and marine, for example. There's probably enough demand and enough need to do a fund at that scale for the country. Now, if you have specific donors that are interested in only marine, like some of the debt swaps have been really focused on the blue economy and marine 30 by 30. That the donor could say, we're really interested in a trust fund focused on the marine. Keep your mission clear, and that's totally justifiable. and Sri Lanka is, large, populous enough country and busy enough that might work as well. So you could easily do two. But again, think of scale, think of a minimum amount.
There's another question, David. One more in the chat, and then we'll take one from the floor, the screen. Thanks for this great content and information. Can you talk a little bit about reporting? How do these conservation trust funds report, and what do they report on? For example, is it funds performance, and things like that? So, question is on reporting.
Yeah, a great question. This is one of the, I mentioned transparency probably about 5 times. It's really important to that the trust fund earns people's trust and shows us good governance through reporting how they're spending their money, what they're, so basically trust funds produce an annual report. That annual report is usually available online, and it covers both the projects that they've invested in, and usually it covers their financial situation. So how much money's been spent, how much money's on hand. The idea of transparency as part of good governance is really important. And now the more challenging part of the question is, how do you report on impact? And this is something that trust funds are working on. They recognize it's really important. So I mentioned you have your mission, and then you would put together a strategic plan. How are you implementing? What's your strategy to achieve that mission? That strategic plan would probably be a 5-year plan, maybe a 10-year plan. And then each year you would, as part of that strategic plan, you'd identify your targets, what you're trying to achieve with that strategic plan. Each of those targets then you'd have programs that you develop to try to achieve those targets, and you'd develop key performance indicators for all the programs, and you would require your grantees to track those key performance indicators. But it's, again, conservation is challenging. It's challenging to know what impact you're having, and everyone's working on trying to improve how we measure our impact. So,
David, presumably this also means that for countries that may not have been in the habit of having external folks involved in that reporting, independent third parties involved in that reporting, that the government and other stakeholders would have to be open to that, right? Because presumably, impact needs to be assessed by someone who may not be based in your country or isn't a domestic stakeholder. Could you talk a little bit about that also? Because I think, and the reason I put this is in the context of what Lucy asked earlier, which is the role of government. So in Sri Lanka, disbursement of funds for conservation is almost entirely by government. Officially, of course, there are many other organizations that work on conservation initiatives spending their own money, but formally for, let's say, financing conservation in a marine protected area or any other protected area, it's the government. So this is a very different mechanism where the disbursement happens separately, which means the government won't, will have to be open to having independent parties assessing impact and so on. So could you just add to that as well?
Sure. So, an interesting question. So one of the challenges with the trust fund, say you're extremely successful, the last thing that you want is for the government to reduce its spending on marine protected areas. So government finance for your marine environment needs to really stay strong, stay committed, and they need to see a trust fund as something that complements their annual budget investment. Government budgeting is really one of the most important and secure funding for conservation. It's you can't always count on it, but it is they're capturing tax revenue from all the benefits that nature provides. It's otherwise very hard to capture revenues from nature, right? We can do it from entrance fees, okay, maybe a little carbon, but but that's not really capturing the value. The value of nature is captured through, taxes on salaries and airplane tickets and everything, that all the tourism revenue that occurs before someone enters a park, right? So that all is government funding. So in terms of whether governments are hesitant for independent reporting, I don't think that the trust fund would force governments to report on their expenditures or their budgeting, just the trust fund's expenditures, right? However, by reporting transparently and trying to use good indicators of impact, it could encourage the government to, follow certain methodologies that are also tracking their impact in ways that could lead to increased transparency from the government too. But you're just having a trust fund doesn't force the government to change anything that it's doing. It should be complementary.
Yeah, thank you. We have a question with hand raised. Senit, over to you.
Thanks, Anush. Hi, David. I'm Senit from BSF. I have a question regarding the fund deployment chart that you presented. I was curious to know what the drivers behind the switch of the focus is. For example, is it the case that CTFs were always preferring to move towards return-based deployment, but they couldn't, therefore, in the past 10 years, they did more grant-based fund deployment? Or were there any specific experiences regarding grant-based fund deployment that is prompting them to now switch into more return-based fund deployment?
Yeah, well, thanks for the question. Really interesting. So part of it is doing return-based investing requires a set of skills that the conservation trust funds tend not to have. I mean, investing is hard. So, it's easy to invest in a company. It's just hard to make money from that investment. And the trust fund board has this fiduciary responsibility. It's responsible for that money, making sure that the money goes to the beneficiaries for the purposes that it's created. And if you take risky investments in, even if it's a conservation business, right? But still, it's a risky investment. That's you need to really know what you're doing. And so there have been a range of trust funds that have been doing this. There's a trust fund in Colombia that's quite successful at doing this. They built up the knowledge and capacity and are doing it. The reason that people are interested in it is because if you're just giving grants every year, the money goes away, right? And the organizations receiving the grants, they just expect to get grants. They're not really working on their own self-sustainability either, right? And so if there are chances for revenue streams, be there tourism related or aquaculture or something like that, why not help those community-based businesses or enterprises become self-sustaining through revenue? And that's where a loan, for example, even if it's a concessional, like a low interest loan, might be more interesting than a grant. There's also some interesting new mechanisms where you could give a forgivable loan. So you give them a loan, it's on their books as debt, and they should be repaying it. But if they achieve their conservation outcomes, or if there's a problem, then you can forgive it, and it's gone to at least to a community enterprise. And so there are ways to explore that, but it's just hard, and it takes time to figure out, or you need to bring the right capacity onto the trust fund, right from the start, so that it's comfortable doing these program-related investments.
David, I'm going to take a few more questions from our chat that has been sent directly. This one's interesting. I'm not sure whether you'll have one answer. Geopolitical dynamics and other sensitive matters act as deterrents against complex arrangements like CTFs, debt swaps for nature. based on your experience and case studies, could you list down a few reasons for CTFs to not work in favor of small island nations like Sri Lanka?
Well, I'm personally a fan of the mechanism. I think that it does produce a degree of trust and accountability that most mechanisms don't. But it takes time. It takes a long time to set it up right. You need a champion, someone leading it and pushing it. You need that anchor donor, someone willing to put money in up front. So there are a long list of challenges to getting a trust fund operational. If you're planning on doing it from a debt swap, debt swaps, although perhaps Sri Lanka is well positioned for one right now, they're complicated transactions, and anything could delay or send off a planned debt swap, so that's challenging. I think that the biggest challenge, though, is getting that anchor donor. If you can find an anchor donor, someone willing to champion this, finance it, do it over the 2 to 3 years it takes to really build up the stakeholder engagement, then that's you're on a good path forward, and there's no reason that you couldn't create it. The other big thing I mentioned before is that the government, they need to be comfortable letting this be independent, because that's the key to success. And so again, that's partly what takes the time. So
I think that's a good call out, David, that the government has to be, genuinely willing to make it independent. Yeah, sorry, a quick follow up. This one from me actually, because you mentioned the importance of getting that anchor donor. Typically, do you see that anchor funder being an international development organization, an IFI, World Bank, that sort of thing, or is it more large philanthropies or philanthropy-led, donors? What has your experience been typically, and especially for a country that is so new and doing? Let's say Sri Lanka does a CTF for the first time. What would send the most positive, strong signal? What type of anchor donor?
So I'm not familiar with the donor landscape in your country, so it really depends. But I mean, some donors do not invest in endowment funds, but are happy to support the creation of the trust fund. For example, providing technical support. We're working with USAID, for example, in one country and a region for that. But they would generally not put an investment in an endowment. However, the U.S. government does have the Tropical Forest and Coral Reef Conservation Act that does kind of debt conversions. There's a lot of the best trust funds were established with guidance from the international NGOs. They are able to bring in those philanthropic donors to be the anchor donors, to really give you the time, the runway needed, and act as a champion. And they also bring knowledge. TNC and WWF have created quite a number of trust funds all over the world. And Jeff initially funded quite a few. They're starting to think about how they can support trust funds more now. So then there you would need the government to agree to allocate part of its STAR funding, or so it really depends on what money's available.
Just a quick follow up on that from the chat. It is, could the anchor donor be another government? And if yes, what limitations are there for CTF to be truly independent? So, for example, another bilateral donor, let's say,
Yeah, Germany, for example, is a very strong biodiversity donor, and they've supported trust funds in the past. Most of the time they so a lot of the donors that do invest in trust funds will start off, especially the NGOs, will start off with a seat on the board, one seat on the board. The board could be, 9 people. So, although the donor has a place and a part of the governance structure, they don't have an overwhelming voice in the direction. So it really is an independent organization. That's part of the goal. But by having a seat on the board, they can oversee, be part of the decision-making body. Some donors choose not to have a seat on the board. They only provide the funding. So it really, you design it to be an independent entity.
Thank you. We have Arpana Kiritaran, also collaborating with us on interesting things and currently at Columbia University. Arpana?
Thank you so much, David, for your really insightful comments. So I'm taking a class on climate finance this semester as part of my master's program. And something I'm currently thinking through is how to rethink financial risk. And we see that risk gets used in so many different ways, from narrow financial measures of volatility, risks to returns, risks to people, the environment. Could you tell us a little bit more about what the risks are of conservation trust funds and what can be done to mitigate them, please? Thank you.
Well, great question. It sounds like the program is working out for you. Well, I mean, part of why trust funds are interesting is because they try to manage risks. So they, if they're investing money in the stock market, they're trying to invest it in a diversified portfolio, trying to manage those systemic risk by having a mixture of stocks and bonds. Stocks and bonds tend to produce returns. They're offset when stocks go up, bonds go down, things like that. So, but also you could diversify through real estate investments and things like that. So there's ways to diversify your investments. Also you want to manage. You want to set aside money for inflation, things like that. So that right now we're going through an inflation crisis globally. It seems to be calming down a bit, but that means that the $1 million you had in the bank 5 years ago is not worth the same $1 million, today, or it's worth less than today. So, otherwise, there's operational ways you can try to manage risk as well, by not following only one strategy, but using a diversified approach to how you spend your money, how you invest your money. The risk is a big question, and one that nature alleviates risk, but it doesn't really get paid for that service. So that's another challenge, an opportunity.
Thanks, David. I have a couple of follow-ups towards the end before we wrap up, but in the meantime, let's take another question from the floor. Hishal Thiris.
Hi, David. Sorry, I don't know if I can be seen and heard. Thank you so much.
Go ahead.
Great. Thank you so much for the taking us through how the structure works. My question is in regard to what you mentioned about potential pitfalls of starting this newly, and how you mentioned that it takes time to get it right. I'm just curious, given your experience, are there any legal concerns or issues when it comes to setting up a structure for the first time and the first time around? Maybe in terms of tying the use of proceeds or the deployment of these funds towards conservation outcomes, and also more generally in terms of thinking of a private structure that is linked to essentially a public good, such as conservation. I'm sorry if my question wasn't clear. Maybe I can be a bit more clearer, but.
Well, let me try. Let me see. So, part of as I mentioned, the trust law is embedded in common law. So if Sri Lanka is a common law country, which I don't know if it is, but I'm assuming it is, that there are trusts around. There are lawyers that understand the trust mechanism, so that's pretty easy. And you know, if it's not, or if there are complications with, let's say, international transfers of money or something like that, where you would need another structure. Oftentimes, a nonprofit law can be helpful, and you can always create a trust overseas, offshore. So there are legal ways to solve that problem. But I'm assuming that it's actually possible to have trusts in Sri Lanka. And there was another part to your question. I remember.
Ishal?
Yes, in terms of your experience from countries this time around, have there been any sort of legal clauses or new legislation that needs to be passed or anything along those lines specific for conservation? Because we do have
right, because of the government versus private. Generally not. I mean, generally, if you can have a trust fund, if you can have a trust or like a nonprofit that's able to give out grants, right? So that again, you need to be able to give grants out. If there's control over how grants are given, and it's complicated, that might be a problem. But generally, giving out grants to nonprofit activities are allowed, and that's the main mechanism. Some of these other complicated mechanisms we talked about before about impact investing or return-based types of use of funds, that then you get into financial regulations, and that can be really complicated. But just basically giving grants out is something that's commonly done.
David, I'm going to take another question from the flow. Could you give us examples of entities that provide technical support to set up a CTF? Presumably Conservation Finance Alliance might be one, but yeah, entities that provide technical support to set up a CTF is the question.
Yeah, so as I mentioned, all the big environmental NGOs have set up trust funds before, and they have competence. When you're talking, TNC, WWF, WCS, this Enduring Earth project is now building a really strong technical team. So those are project finance for permanence. The CFA provides support. And then there's some consultants out there as well that do this as part of their job. There's only a handful of consultants that are really good at this, and the best ones are in very high demand. So it's definitely worth trying to get their attention when you can.
Okay. I think we just have one more coming in. So I encourage everyone to use the next few minutes to either raise your hand or post it in the chat. This question, David, is around governance. So from the best practice report that your organization did, and also with your experience of existing CTFs, examples of which you gave, could you tell us what, if any, has gone wrong and lessons around governance and participation on the board of conservation trust funds? And
So things have gone wrong. I would say that the two biggest problems have been the inability of the trust fund to raise adequate capital so that they don't have the scale that they need to achieve their mission. And that, can be due to, challenges with the board or, lack of competence, lack of investment, in the right staff, things like that. So competencies at the Secretariat. And then the other that we've seen a little bit is that if you don't kind of if you don't put the independence of the trust fund into the trust deed, into the founding documents, there's a chance that the government will slowly increase its presence on the board. And then in a way, there's been a couple of cases where trust fund has sort of been taken over by the government, even though intentionally it was created to be independent. And this has caused donors some unhappiness around that. And but so far, that's been the complete derailment of trust funds has only happened a handful of times. Most of the time, the structure is well done, and the government recognizes value, so they don't try to interfere.
I have my own follow-up on that, David, around composition of those boards. Again, of course, in the context that we are not a mature CTF, a mature country having done CTFs before, any call-outs you have for us on getting that composition right? And I know it'll depend on who the anchor donor is, how large or small it is. Is it one large CTF for the entire marine space in Sri Lanka and so on? But typically, what's the kind of composition between those who bring in the money, those who have some formal role in governance of conservation in a country, government, for instance, and also, those who are genuine stakeholders who will be impacted by how the funds are deployed, community representative, NGOs working in that area, that kind of thing. How should we look at that composition if we had a free hand to design?
Well, you do have a free hand, and it's important to plan this out, in the beginning, like you're doing. So you touched on it. So you can either you can set up the board initially with all those right people, right? Stakeholder, community groups, government reps, private sector. You usually have a set of competencies that you want on the board. So someone that knows finance, that knows law, someone who knows the marine conservation really well. So there's competencies, and then there's the sort of affiliations, right? So like someone from academia, someone from civil society, someone from a donor, and so you design the board with these criteria, and you, again, try to build them into the trust deed as much as you can, but without being too prescriptive, because the trust deed is permanent, or the charter is a permanent document, hard to change. You usually require 2/3 of majority of the board voting to change that. Generally not changed. So you want to design it right, with the right level of diversity, the right represented. And I've seen all kinds of structures, all different ways that's done. In some cases, if you want regional representative, they say one person from this province, one person from that province, that kind of thing. And there can be very prescriptive, or you could just say, we need to have 7 members, maximum 3 are having any association with government, and ideally one from the private sector, but those are, you have to balance out being over prescriptive with, recognizing that things would change. And then generally the board nominates replacement members. So every few years you're replacing a few members, and the board is the one that approves. So once the board is established, it becomes an independent entity that's self-governing and replaces itself. And so, again, you don't want it to migrate over towards only private sector, or migrate over towards only academia. So you need to structure that in ways.
Okay, maybe we take one more before we move to the end, David. What are funders and investors in a CTF looking for when you look at international funding landscape? if Sri Lanka is looking to fundraise a CTF for marine conservation, would prospective donors and funders look mainly at how credible we are at managing money, overall governance, or are they looking more for a good global story around conservation or a good, compelling story on the dangers of a particular nature loss in our country?
So the good governance and the effective management is a requirement. That's not enough. Just having a good structure and a good governance, that's not enough. You need a compelling story. And right now, the compelling story is 30 by 30, expanding the protected areas, improving their governance, improving their management, sustainable financing for those areas. That is something that's, you have donors, philanthropic donors and bilateral donors looking to support that. So you need to convince them, and this is where government plays a role. If the government what makes these project finance for permanence projects so interesting is that government makes a series of commitments. The money is contingent upon the government fulfilling those commitments. And that is a powerful driver for donor engagement and interest.
Thank you, David. I think that's as good a note as any to end, especially because Sri Lanka does have these, has these commitments, 30 by 30 commitments. We now have, a project under the Global Fund for Coral Reefs, which IUCN is leading. We also have, great stories around mangrove restoration that has achieved global attention over the last week. So certainly something that we can do. So before I close, thank you very much, David, for taking the time. I know it's late for you in the US. Thank you very much. It's also quite early for us here in Sri Lanka, and folks need to get on with their day. We're really appreciative that so many folks joined us. And just before we close, I'm going to put one quick slide on screen so you know how you can continue to engage. So, folks, there are some online resources that Tashi will post in the chat now. Our knowledge primer on conservation trust fund. This is very much, a summary entry for some of you. For more comprehensive information and, the great best practice and comparisons that have been done, please refer to the Conservation Finance Alliance study. We'll send you that link also. Also in the chat will be an article we posted on green finance, which is mainly on looking at the financial institutions landscape in Sri Lanka. And if you'd like to know more about the overall project, which Center for a Smart Future, Pelagikos are all part of under Blue Resources Trust, check out that link to give you an understanding of this particular piece, the financing piece. And if you'd like to know more, I know Tashiana has been in touch with all of you, write to us, write to this email address to talk to us and follow us on Instagram. But thank you very much. I know we had a lot of interesting people on this call, from central bankers to academics to researchers, conservationists, other organizations who are working in and around these areas. So we're very grateful for joining us today, and we'll end the session here. But once again, David, thank you very much for joining us. You really helped us understand the nuts and bolts of CTFs, help us get a better understanding of important dimensions of it that we need to think about as we go on this journey, and also some call outs on what to look out for, and also for the encouragement that Sri Lanka can do this, and it is a possible avenue for us. So David, thank you very much once again, and we hope we can continue to be in touch and seek your sage advice as Sri Lanka goes down this journey.
My pleasure.
Thank you.
Thanks, and good luck.
Thank you once again, everyone, and have a good day.